Welcome back, YouTube. So in today's video, we're going to take a look at a few different aspects. We're going to take a look at some charts here, obviously, and we're going to take a look at some macros and some micro events here pertaining to Dogecoin. So first off, I want to take a look here at the charts here, and I want to point out that what we've pretty much what we've been seeing is a focal point between the 72 and the 14. That's the orange and the yellow line here. And we've seen the bounce here off of the 72 before, right? This was technically our initial rally here back in early August from the 72 past the 200 back up well above the 14. And we've been using the 72 as support for quite some time, right? So even back here in July, you'll see like mid-July, you've seen that we were able to use it for support when we're getting rejected here around the 21 cents mark. We're using the 72 for support, and then ultimately ran and tested around the 28 cents mark. You can see it being a big focal point here in June, and even back here as early as May, right? So the 72 has been a very important marker here over the last few months, and now we're seeing this kind of like ping pong action here between the 72 and the 14 day, right? So we're going to have a decision here relatively soon as far as a break between whether or not we're going to flip the 14 and use that as a form of support here to go retest some of these levels here in the mid 20s, or if there's going to be a further liquidity grab here from some of these other lows. But ironically, the gap here isn't severe between where we last were able to grab some liquidity, which is around the 19-20 cents mark. Now, what's different is we've seen the 200-day, which is this red line here, break past the 14 and even dip below the 200 here. And technically speaking, when you have a large time frame kind of cross a smaller time frame, you're looking at technically a death cross here, but it didn't do anything abnormal. It wasn't a severe move downward. When we saw the 200 surpass the 14 here, it just came down to where it previously was back here in mid-July. Grab liquidity and test it again, despite the 200-day price movement. So ultimately, we're going to talk about a few things here pertaining to Doge and the macro and the micro here. But ultimately, especially for Dogecoin, even when we take a look here on market cap and overall, just look at the top 10 cryptos, what we're looking for is a kind of like some specific and important things here for Doge to kind of move it forward, and as we go through the shifts of the market. And what I mean by that is, if you've been following my channel for a while, when we talked about the institutional money coming into the coins, one of the things that we talked about was the changing of the cycles here, right? Because previously, when retail, most of the money that was coming into crypto was the retail sector. It was very sensitive to news. It was very volatile. You're going to see like these huge spikes. It could be anything pertaining to a particular asset. You're going to see like these huge runs. And one thing I said was, when we start to see that dilution here with corporate money or institutional money, a lot of those things are going to change. Not necessarily saying that it's not going to appreciate or grow, but it's going to become less volatile. You're going to see more consistent returns here, probably a slower pace here as far as the runs, unless something really big happens. And also the crypto winter, that 80 to 90% sell-off thing where the crypto crashes and you have to wait to recover until peak season, all that kind of stuff. I said, typically if we see enough capital come in with institutional money, those things are going to go away. We're not going to see a lot of corporate held things sell off 80 to 90% and sit there for years, right? That's counterintuitive to why they're investing in these assets. So the money is going to be put into there to kind of smooth out some of the cycles that we're seeing. And we're going to look at, I want to switch over here because I want to show you top 10. A lot of times people, when they focus overall on their particular asset, it can become hyper focused and they'll say, oh, this is happening across the board. So I want to point out a few things here. The fear and greed index, it's neutral. Crypto RSI, relatively neutral. Altcoin season, relatively neutral. You're seeing a flat line pretty much across the board. It's not a Dogecoin thing here. Really, the only thing that is green here in like the top 10, top 15, really, if you're being specific here, is going to be Bitcoin and Solana. And this is the 7-day, right? Um, and obviously Bitcoin is going to have the higher push of the institutional money, so that's to be expected. That's typically going to lead the way. But the last 7 days, everything's red. And it's not necessarily these huge dips, obviously, but it's more of a flattening of the money coming into the market here. And I don't necessarily believe that this is going to be the story of crypto going forward. I do believe that we're going to see some rallies here, especially as we have like SPY and all these things, and a lot of capital going in. But I do believe right now what we're looking at is a competition between crypto and AI, or as far as for institutional allocation of funds, right? I'm not sure if you guys are keeping up with things like Nvidia and a lot of the money that Mark is spending over at Meta, but they're doing huge contracts for hundreds of billions of dollars going forward, even with the Donald Trump's deal with Intel, and hoping to kind of jumpstart the AI and kind of bring some of that technology and that production to America. These are huge investments that is happening right now. And in my opinion, I believe that there's a split in capital that was typically being directed toward crypto, and I still believe it will, but I believe that there's a lot of capital being directed toward crypto to kind of get those returns that it's been famous for. But AI has, if you look at AI and like Nvidia and all of these AMD, what is it? Let's see, Broad Street. Like if you look at a lot of these companies here, like the last 5 years, phenomenal returns, especially for the stock market. AI has been actually giving like meme stock or crypto returns here over the last 5 years, 5+ years, and it's been, if you were able to kind of get in there, you guys can take a look at that. I'm gonna I can do it in a separate video, or maybe in the podcast we can do a comparison. But it's been absolutely phenomenal with the gains that has been coming from Nvidia and the AI sector. Nvidia is the leader, so that's why I keep saying Nvidia, because I know that there's going to be a push to kind of break up their monopoly, but they have some cutting edge technology, some things that they're only allowed to do or able to do. So they're leading that sector. But we're going to see not necessarily just a bank crypto run, but now we're seeing a new technology expansion between what I believe is going to be the chip makers, again, like AMD, NVIDIA, and also technology companies. So, Meta has obviously been hiring talent from OpenAI. Apple is going to, has announced that they're going to be putting a significant amount of money in there. Intel, which is, I know for sure that there's going to be some allocations and deals done to have their hat in the race. So we're seeing a lot of capital being pushed and split up. So it's not necessarily so crypto focused right now. So in my opinion, I think this would just be a point of accumulation here, especially for cryptos. A lot of the main ones that's going to be used, especially like Bitcoin and Ethereum. We're going to talk about Elon's and Doge Treasury here in a moment. I do believe that is a big deal. And this is going to be one of the major catalysts I said that we needed outside of community and using it as an actual currency, which is having these huge reserves, right? Removing those excess coins off the market. And once we get to that point where the coin actually becomes deflationary, this is going to be a big point to actually have more stable runs, kind of calm down some of those sell-offs, and also give us a position here to actually push the coin price actually higher, right? So because having these huge treasuries, having these assets, which is basically what a lot of these funds are doing with things like Bitcoin and Ethereum and all that kind of stuff, XRP, like they're going to invest in that. They're obviously going to they're basically going to stockpile it, right? If you stockpile it, you're removing coins off of the market, which means there's going to be less available, which plays into supply and demand. And obviously when they make these purchases, this is all going to be good for long-term price action. So that's going to be a big part for something Dogecoin specific here. And let's see if I can find the article here. I pulled it up, and that's going to be something that we can talk about on the micro, right? So what I just covered was the macro aspect. I know I announced it at the beginning of the video. So now we're going to take a look here at the macro, right? So here we go. So this is the $200 million Dogecoin Treasury company that Doge, excuse me, pretty much Elon is kind of heading up here. And this is going to be a link here. It's on fortune.com. There's been a number of articles come out. And I want to point out that if you research this here, one of the things that you're going to see is, and this is kind of why I alluded to it earlier in the video, is you're going to see some headlines saying Dogecoin. Let me scroll down a little bit. You're going to see some headlines here say, oh, Dogecoin unaffected by Treasury news. The price of Dogecoin is not being affected. And this is one of the things that I wanted to address, is because they're expecting the meme reactions and saying, oh, look, here's a Dogecoin catalyst. Why isn't Dogecoin running? Where's the 20 cents run from the Dogecoin catalyst? Pay no mind to that. This is what you want. You want a more stable coin. It doesn't necessarily have to, just because there is some news coming out or an article being written about it. Every time there's an article written about it, if there's 5 articles, we need to have 5 runs in the week, and there needs to be these huge price sell-offs, because we all know who's buying those assets. You're going to have to battle with scalpers, traders, all that kind of good stuff. And there's no price stability for those types of runs. So when you have the assets, let these catalysts work themselves out, right? We were building, when we've talked about this over the last few years, one of the things I said, that we're going to be building a lot of avenues for crypto that have not existed. I label us like even as pioneers of the new crypto journey, right? Because a lot of these avenues are being created, especially those of you who've been here since like 2020, 2021, and even before that. You're going to see that a lot of these avenues are going to be created, going into ETFs and these funds, treasuries, for example. All these things are going to be, let these catalysts work themselves out, give them time. And when you see large amounts of money coming into these assets, treasuries, ETFs, whatever the case may be, know that at that point, it's a game of math. You don't necessarily have to worry about the catalyst, or let's try and trade the news here. We need a big run just because it was mentioned in a headline. It's a game of math, right? So when you start seeing these catalysts saying, hey, we're going to buy, $250 million of Dogecoin and do this with it, and we're going to set up the treasury with that. We're going to do this avenue with Bitcoin, whatever coin you're in, or whatever coins that you're in. I'm sure most of you are involved in multiple of them. Give them time to work themselves out. It doesn't have to be a hype thing, right? The money's coming. The money is already here. We've seen the blueprint for what they want. They want crypto in ETFs. They want crypto in these funds. They want crypto in these 401ks and these investment accounts. They want crypto into treasuries. They want crypto, right? The only thing now it comes down to is coin count, positioning, and letting it work itself out. Everything that we've talked about, whether that be institutional money coming in, the switching or changing of the guard here between some of the money coming out of the stock market, and we talked about potentially crypto becoming like its own version of like the S&P 500, and you're going to have like kind of like there's going to be like this competition between crypto and stock. All of these things are happening, and I know the time frame may not be favorable for a lot of people, but just understand that you are in the beginning stages of something great. You're watching it unfold. You're watching these avenues be built. And the returns here thus far have been extraordinary. And I believe that they're going to be even greater going into the future, right? So when you're looking at these articles and see these price points coming up and these numbers, hundreds of millions, billions of dollars, and all that kind of thing just being flooded into the market, just know that it's a matter of positioning, right? So I do recommend, I'm going to talk about this in my next podcast episode on the channel, so make sure that you guys are tuning in, but I'm going to recommend that you look into AI as well as crypto. I know a lot of people are heavily invested in crypto that watch my channel, but that's one of the reasons I do kind of discuss both there, because I believe it's very important going forward, right? I'm obviously invested in both, but I think that it's important. It's an important thing to be considered when you are talking about being an investor and getting the best possible returns in the future. Because, like I said earlier, I believe institutional money is splitting between AI investments and crypto, right? If they're diversifying in those two avenues, they believe that there's going to be a potential for huge returns there. Therefore, we need to be investing in those two avenues because there will be returns there. That's where the money is going. Follow the money, right? So that being said, I will see you guys. I'm going to upload a podcast episode later this week and discuss some of the things that I just said and then some. So please continue downloading those episodes and listening to them here. I appreciate you guys. Subscribe to the channel, like the video, share it with a friend. Let me know your thoughts in the comments. We can have this kind of like an open discussion here. Let me know your thoughts, questions, concerns in the comment section. And I will see you guys in the next video. Thanks.